Welcome back to Morning Trade Live. It's time now for the big picture. So let's welcome in Nathan Peterson, Director of Derivatives Analysis, Schwab Center for Financial Research. All right, so we're seeing some give back in the markets today off the back of the relief rally we saw yesterday. What stands out, Nate?
Sure. Hey, good morning, Sam. I think this is, just some normal consolidation. It's nice to see that potentially we can get a, vote from the House on getting the government shutdown over with tomorrow. That's would be nice for the markets. But then, that's also going to bring in, a lot of the economic data that's been in the queue, so to speak. And, Goldman Sachs put out an estimate that they thought 50,000 jobs were lost in October. Perhaps that's not that big of a deal. Perhaps if we get an uptick in unemployment, towards 4.5%, maybe it doesn't rattle too much of the bull thesis in terms of having a strong enough economy, double-digit EPS growth, for 4 quarters now. And I think as we move through this fourth quarter here, yes, we've got bullish seasonality. We got potentially performance chasing. We've got that technical support held where it needed to on Friday. I was watching that 50 SMA on the S&P 500 closely on Friday. That held up, which is nice to see, because now if you're a trader, you have something at least to trade against in terms of where you would get out if support doesn't hold in the coming weeks. But I think, Sam, for this, as we move through this Q4, which is historically a good time for the market, I'm not 100% sure that it's all going to be about AI. I think that there's been some damage done to that speculative Momo group. You just mentioned quantum computing. They definitely fall into that cohort. We've looked at crypto, for example. October was supposed to be a really good month. Q4 is supposed to be a really good month for crypto prices. We've seen those languish. Bitcoin trying to hold support at 100K. So I think that the question would be, on when we get this economic data, does it thwart, our thesis that potentially we're going to get more Fed easing here in the coming FOMC meetings? I think we're at 69% for December. And then the other question is rotation. Does this begin to broaden out? And I don't necessarily mean small caps, but just into some of the other sectors, because if you look at the likes of what happened with Palantir selling off on earnings, Meta selling off on CapEx increase. If you look at this morning, CoreWeave, Nebius selling off. These are the data center compute leasers selling off post earnings there. So I'm wondering if this rotation is going to need to take place in order to keep the index levels in this healthy uptrend. I think we're just going to have to take it as it comes as we get the economic data. And, of course, we get Nvidia next Wednesday.
Yeah, I mean, what do you think is going to be the sort of bigger catalyst here? I mean, is it going to be Nvidia, or is it going to be the deluge of data, which is hopefully going to be the deciding factor on December's decision from the Fed?
I think it's going to be the data. Yeah, it's going to be rolling here. After we saw, what happened with, Challenger job cuts, we've seen job openings that have been going down. I think some of this is anticipated. You could say on the one hand, maybe this is good for corporate margins. On the other hand, it's just, to what extent is the labor market weakening? That's the big question. And on the one hand, there's always glass half full, glass half empty way to look at it. If the labor market is weakening, great, we get the Fed. On the other hand, jobs are at the foundation of this economy. And so therefore, if it cuts too deep, so to speak, or if the layoffs are too severe, does that begin to impact our forward or EPS earnings estimates? I think 14% for 2026 is currently in the cards. So, Sam, it's going to be that data. But then the other thing, I think, is going to be the rotation. And I'm not so sure that it's going to be just we're going right back to the AI tech trade. Because you just look at some of the price action, some of the way that these stocks are responding to positive news. And I think that the sentiment there around the AI trade, the bullishness, the level of bullishness has just been, kind of rattled a bit here over the past month or so. Look at Oracle all the way back down to $235 after being up at $330 post earnings, for example.
Yeah, and I mean, CoreWeave's been reassuring that, this delayed data center partner that they've got is still there in the pipeline. But, I mean, Wall Street, you've got to credit them. I mean, it's been pretty patient thus far with all this CapEx, but it very much feels like they're starting to perhaps question this ROI now. But thanks, Nate. Always a pleasure. Thank you so much for joining us here. Nathan Peterson, Director of Derivatives Analysis at Schwab Center for Financial Research.